All right, what is up, everybody? How is everybody doing on this fantastic Tuesday morning? Welcome to the official Trade Talk channel, where I show you how I analyze price for the most consistent and higher probable entries to help you guys become better traders. Today, we're going to be looking at a whole broad list of assets and asset classes. We're going to talk about all the things that is necessary to talk about. So make sure you stick around. First things first, we got the market open occurring in 25 minutes, which, is we'll take it how we get it, right? We had a small pullback in Bitcoin at the beginning of the week, which was expected. I did post a video over the weekend, a short 8-minute long video. If you want to go check it out, it goes over a little bit broader scope of the view that I have going into the future. The one thing that seems to be at everybody's concern for, let's say, the big part of last week going into this week, naturally is going to be stickier than expected inflation, as that seems to be the narrative driving this week's price action. What if? All right, what if? Do we think that the market is pricing in a soft landing, or is this just a bearish pullback over a broader spectrum? Like, are we expecting a recession in 2023? And if so, is that recession going to come later on into Q3 or even as late as Q4? Well, we know one thing for a fact. The Fed is going to continue to hike rates, and our position on this channel is always trade the Fed. Do what the Fed says to do, simply because they are the people controlling the asset prices. Excuse me on the voice, once again, still going through whatever it is going through, but I am actively trying to kick its buttocks. All right, so currently we do have the S&P 500 that is trading up on the day. However, briefly, it's so close to the open, it's not even funny. You can see here 0.05% up on the day. You got the VIX up 0.25%. No, it's not a quarter of. It's a quarter of a percent. 0.25%. SPY is, as of right now, the market's not open, so it's showing a negative 1.25% loss, but that's probably yesterday's close. USD CAD up 0.17. Just a whole broad scope of assets, because that's what we do here. We take all the data that we can from all of these market participants and asset prices, and then we try to make the best day-to-day trading decisions that we can. As we believe on this channel, as long as you have a solid risk management strategy in place, you can absolutely make sense out of intraday price action. But we do look at it on a long-term scale. We have a top-down approach here on the Trade Talk YouTube channel, where we try to get on the correct side of the trend, and we want to do that on a year-to-year basis, if at all possible, and quarter to quarter, month to month, week to week, day to day, because there is opportunity every single day. All right, so let's discuss yesterday's shorting opportunity. Let me pull up Bitcoin over here real quick. Actually, you know what? Since we got a little bit of time, let's keep it on the Euro USD, as the USD is a huge component in the way Bitcoin is going to trade, simply because Bitcoin is traded as a Forex currency, or as a pair, if you will, a coin, even though it is not a coin. It is simply a digital asset, but since it is traded versus the USD, then it trades like FX. And FX is our bread and butter, so we're going to discuss that. The euro is the most heaviest weighted asset class in the basket that makes up the DXY, coming in at almost 60%. So typically and technically, they trade inverse to one another. So if the dollar's pulling back, the euro's going up. If the euro's going down, the dollar's going up. Pretty much inversely. It's not a one-to-one correlation, but it is pretty close. We are at monthly support on the USD dollar index, the DXY. We are looking at monthly resistance on the Euro USD, though it is not a fresh level, and we like fresh levels better. This would be your freshest level right here at the 1.07365. That's your highest monthly close since this one, right? Since this bullish close. So this would have been the area at which we would have expected resistance to hold. But every now and then you just go farther back and you can find those other levels that are significant to the marketplace. You can see that this push lower here back in 2019 was a very significant monthly support because of how many interactions you got off of that close and the simple fact that it held as support for 4 months right through there, right? So this was support, okay? So like the technical analysis that I teach here on this channel is consistent from whether I'm talking about intraday or intra-month or intra-year. It's the same. We do the same thing. It's just a different time frame. So if we're looking for intraday opportunities, we want to make sure that we're not at any higher time frame levels. And then if we are at higher time frame levels, those are the areas that we get interested for looking for the smaller intraday opportunities. So let me show you what I mean by that. This is a massive swing. It's not the swing low, right? This would be the swing low. So that would be the targeted liquidity in a bear market. And that was the targeted liquidity right here on this month's candle, pushed completely down, taking out that liquidity, which would have been a fantastic trade, looking for shorts on this side of that bearish candle or that bullish candle, knowing that that's the swing low. But we focus more on the support, the objective support, and that price is exact. I'm going to show you just how exact it is. One spot 08994. That's how exact that price is. That is old monthly support. It is not resistance. Bearish closes are objective support, whereas bullish closes are objective resistance. Okay? It's not made up. It's not a theory. It is objective. That is the price that it closed at on that exchange. And it will always be that. So that is where professional traders look for opportunity. So knowing that this is into an area that is a clear objective support, knowing that you had a massive breakdown here and never retested the area, it was so bearish through here, in fact, that the very next month you took out this month's low, got a little bit of a bullish bounce, and then the following month is when the bearishness continuation occurred. So you never even came back up into that level and tested it. So arguably on a much larger term scenario, one could definitely say that the Euro USD is still in a downtrend and that this is not a bullish repair. It is simply a bearish correction. So if you are looking for longer term dollar strength, if you think that what we've seen in the dollar for the later part of Q4 2022 into Q1 2023, that this is nothing more than a bearish or a bullish correction on the USD, then objectively you would be looking for short positions on the euro. Now, I am long, I am long the euro, I am short the dollar down here at the swing lows, essentially. I don't have physically a position open on the euro. I just took a fresh short on it yesterday, and we're going to get into that. But I just wanted you to kind of understand the scope of what we do here on a broader scale, right? On a broader scale. So knowing that objective price of 1.08994 used to be monthly support, and it was a clear breakdown back in the bear market of 2022, because let's be clear, that's when the bear market was, if the bear market is over. No one knows if the bear market is over because no one can see into the future, but that's where we currently stand. All right, so let's drop way down into your smaller time frames, as this is where a lot of garbage goes on. You can see how last week I posted on Twitter that I was expecting a euro dollar pullback simply because it looked like it was getting a little bit long in a tooth, meaning it's overbought. All right, it's as simple as you can get, and it's showing bearish divergence. Now, the argument could be made that this divergence from this swing high to this swing high has already played out, and it played out here when you pulled back into the 50. That is when support was formed, and you got another bullish rip out of that. So, with notwithstanding that has already played itself out, you still have a new form of divergence, and not quite at overbought levels, but still high enough to where professional investors are not going to be looking to buy the euro at 108. All right, they're just not. Why? Well, because it's pretty much the top right now. It might not be the top 6 months from today. This could be looked at as a hell of a buying opportunity 6 months from today. But we have to operate on the data that we have right now, not 6 months from now. Otherwise, everybody would be trillionaires, right? Everybody would be. But anyway, knowing that this is old monthly support, I know that there is a good likelihood that we will get some kind of reaction here, but I don't know how long it's going to take to play out. I don't even know if it's going to play out. I just know that it is what it is, and it is an objective price point that I need to focus on. So let's drill down into the intraday price charts here, and I'll show you just how my magic works. All right, here we have the hourly, and on the hourly we have multi-days of price action. Multi-days, many days were the price action here. And as you can see, you got your chop slop, is like what we like to call it in the community, random market violence, right? Where you're taking out swing lows, taking out swing highs, liquidating everybody from left to right to front to zero. Nobody can make any sense of this price action, but apparently me, all right? Even though I've been teaching it for 2 years, but you're getting there. You're getting there. It takes time for these plays to play out, and timing the market is the most difficult thing to do. In fact, some analysts and investment people out there believe it's impossible to do, which I disagree entirely with that. I think it is possible to do, and I think as long as you are taking highly defined risk controlled measures when operating inside of these or around these levels, then you can absolutely have a successful strategy out of it. But anyways, you can see here that you made a top at that monthly level. Clearly, even on an hourly time frame, this level was affecting the marketplace. You were able to trade above it there briefly. Then it comes in and it sets a resistance, trades down, takes out this swing low, right? So now your liquidity is this swing high, this swing low. Then the market goes back up, gets above, falls back under, then comes back. So you're pulling in bears with this fake move here, right? You're just constantly generating liquidity. You're pulling in people. You're showing them one thing and doing another. That's what the market does. Price is an advertising mechanism. It is to generate liquidity. All right. Here is liquidation generation. There is your liquidity. Here is your liquidity moving forward. After you take out the liquidity, you drop back under monthly support. Just stay with me here. You trade back up to monthly support. Back under, set a new low. Did you take out this low? Negative. You did not. In fact, what did you do? You traded right back up, right back above that monthly support. And if you have zero patience at all, you probably shorted at that level because there is a clear and defined supply zone right there, right? Here. And you are starting to make that trend, right? You can see it. I mean, I'm sure I don't need to draw a trend line for you at the time, at this time right here, okay? At the time, you had a trend, and then that trend was busted on this move right here. So why did I short it, and where did I short it? Well, I definitely didn't short it at 4 o'clock in the morning as I was not awake, but I did believe it to be a shorting opportunity simply because I believe this was the liquidity run above that high. So if I'm correct in my thesis, and that is the liquidity run above that high at a major monthly support area, then there is no point for the market to retrace all the way back to that point. So I find an area of resistance, and then I watch how the market reacts to that resistance. You closed above it here, and then you got a bearish reaction there. Boom, right here, right? And then look how the market reacts. 9 o'clock, right here, you drop down again. This is a nice push lower. That puts us right back under that monthly support. Remember, if we're going to be right on our short thesis, there is no need for the market to make any higher correction other than the short thesis is the wrong thesis. Okay? So that's all I have to operate with. That's the only knowledge that I have. I don't know that this is going to be the top. I have no clue. All I'm saying is now that this has occurred and it has shown me a bearish reaction and it has played a little bit of games, there is a downside target for me to target right there. And the upside target, which would have been there for any upside trades, has been eliminated here because the liquidity is gone. So I'm of the thinking that this rally is intensely false. Intensely. Like there's no reason why this should even be occurring, right? On any data for any reason. So I'm waiting for a setup and I get that set up right here in this, right here. And all I have to do is watch hourly closes down into supply, as that is supply here, right? But I closed inside of supply, so I have to be very careful and cautious because I did close above the supply. So that means the market could be looking for a full-on test of resistance. What is the full-on test of resistance? Where is the highest resistance? Right there. Here it is. There is the push to resistance. So if I'm correct in my thinking that this could be a potential short play on the day, the market drops back down below monthly support, finds resistance here. Now notice the close on this candle. This candle closes well under and formed a brand new supply. There, right there. So on this push here is when I take my entry, right? Objective stop is going to be above resistance. The next highest resistance is here. Literally, you could have put it above that if you want, seeing how this is the ultimate downside target. Now, once I took the position, entry, price started to instantly trade away. This is also at the same time that we executed a Bitcoin short entry as well. That played out to perfection as well. Price trades away, comes in here, finds support, but then ultimately right there is when my target is hit. Therefore, my entire play, or what I was planning to occur, what I was wanting to occur and hoping to occur, occurred. It happened. So, boom, trade successful. And I was patient. I waited for the setup. I waited for everything that I talk about, everything, all the time. And if you look at the entry, could you get any tighter than that? One spot, 08994. Could you have gotten a better entry? That is objective monthly support into a clear and defined objective supply zone that closed under it, not inside of it. Why didn't you short this? Because this candle closed inside of supply. So I know that there is a high likelihood that price is going to test resistance. I don't know if it's going to break out. And this is very momentous to the upside. So people could be buying the pullback here, which they likely were. So there wasn't a trade to take here. You could have risked it, but you have like two things that's already told you not to take the position, right? I waited on until I had a clear signal. Yes, this looks great. And the fact that this baby right here closed under is even better. Now, had this candle closed back up above this, I would have been closing that bad boy out or eat the stop. It's your choice at that point. Once you initiate positions, once you enter the market, once you put risk on, it's up to you to decide what to do with that risk. Okay? Now, we had a very good session this weekend. It was a rant. I mean, there wasn't a whole lot discussed other than me just ranting, full on madman crazy mode rant about people and how they view the marketplace and what it is that, that people think that I'm doing versus what I'm actually doing, right? They're completely different. I can say something and someone will latch. I can literally say a paragraph of statements, information, and people will latch on to literally one sentence inside of that entire paragraph, taking that one sentence completely out of context. And then I say something to maybe dispute that, or it sounds completely opposite of what I just said, and then they get confused. You have to take everything into context. I am looking for a macro correction on Bitcoin. Therefore, I am looking for a macro correction on the dollar, a macro correction on the euro. I am looking for risk to pull back. You are overbought. You are severely overbought on pretty much any metrics that you look at. Let me get this off, as I know there is no volume data on this asset. But now here on this indicator is simply, it just shows you like the outside edges of volatility. It's a volatility here. I'll just show you the indicator. It's right here if you want it. Right here. It's a mean reversion channel. All right. There's the dude that made it. There's how many people currently use it or do have it or whatever. But it's a mean reversion channel. It just shows you volatility compression and volatility expansion. You don't need it. You can see the volatility compression and expansion in price. But if you can't, then you can use it. You can see how the outer bands are squeezing in towards each other, right? This top line is moving lower. This bottom line is moving higher. That's volatility compression. Volatility compression is usually and sometimes periodically followed up by expansion. Volatility expansion. And that's typically when we want to look for trades, especially trending ones, right? So we want to see an asset trending, and then we want to look for trades that can give us the highest edge of being right. So taking a short trade on this isn't even advised because you're clearly in an uptrend for the multitude of days. It does look like it's losing steam, and since we know that there's a pretty big level up there, then we know that we're probably looking for a correction. And then if we take this out and we go look at, like, say, the broader markets, here's your S&P 500. Here it is, right? Anytime you get extremely volatile, you break outside of this mean reversion channel. Not always, but usually you're going to get back in the mean reversion channel because price fluctuates like that. It moves in waves. It oscillates back and forth. It doesn't move in a straight line. All that. All those cliched things that you hear people say in the marketplace. It's true. The market is searching for liquidity and will only turn and start that trend back up again once it has found a sufficient amount of liquidity, supply or demand. Once it has found the sufficient amount, I don't know what the sufficient amount is or where it's going to ever be, but once it does, then you will see volatility expansion take place, and then the trend will begin to operate again. So lots of volatility compression going on here, meaning sideways price action, That's compressing volatility. Then we start to get expansion, expansion, expansion. But notice how the price does like to pull back every time it gets in what we would classify as an overbought. That's overbought, right? When you get a big move up, you don't want to be a buyer at these areas. You wait for pullbacks, you wait for corrections. Up here, falls down to the lower end of the mean reversion channel. Now, I'm not showing you this and acting like this is something that I use to make positions or anything like that. I don't. I'm only showing you that where we currently were at the time of me making that post, we're in the top bands of what you would expect to be overbought. There's a simpler indicator that you can look at that'll show you this exact information, and it is called the RSI, the Relative Strength Index. You just need to learn how to look at it. Stop looking at it as a buy or sell indicator. It isn't. It's an indicator that shows you when there's value in the marketplace on a specific time frame. You were clearly overbought up in here, right? You're clearly overbought up in here, right? Go to the daily time frames. Not quite there yet, but still into resistance, right? We're looking for a pullback. We are going to remain bullish on this channel until we get under 38.45. And that's just the way it is. Objectively, as long as price is trading above 38.45 spot 40, you are bullish on the year. That is an undisputable fact. I don't care who you are on Twitter. I don't care how many followers you have on YouTube. You cannot argue to me that the S&P 500 is in a bear market for 2023, because it isn't. As of right now, you are bullish on the year. As of right now, you are up on the year, almost 5%, in fact. Second objective fact that you cannot argue with me is you are 16% off the lows. That's not a bear market anymore. You must be under 20% to be classified a bear market, according to Investopedia's definition of what actually constitutes the term bear market. You are no longer in a bear market. Now, could you be in a bear market in the future? Yeah, of course. I don't know what price is going to do, ever. I've never said that I do know what price is going to do, but I know one thing. As of right now, the market is showing me that it is bullish. And we did briefly trade bearish on the year the very first couple days that the market was open, but nevertheless. So right now, objectively, your yearly low is going to be this price, $37.94. Your yearly high is going to be this price up there, 4095 spot 80. Your open is 38.45. So as long as you're above 38.45, you will be on the right side of the trend by looking for buying opportunities, not selling. That is if you're intraday or intra-week or intra-month trading. If you're trading on a smaller time frame, a smaller scale, if you are a macro trader and you're looking to buy and hold positions for years or quarter to quarter even, then you need more data. You don't have enough data yet to even think about a position, right? Whereas since I have very strong risk mitigating tools, I can take intraday positions. All right. So that's where we are right now. Sticky inflation. Is that going to cause a bear market 2023? Is that going to cause what we've seen in 2022 to come back? Is this the bottom? Those are answers, or those are questions that cannot be answered. We know inflation is trending lower. Objective fact. We know the markets are trending higher. Objective fact. This is what we know. The FOMC is likely going to price in a height rate of 25 basis points, which is a quarter point. And they are going to likely do that on a 98.1% chance that that's going to happen. That's what the marketplace is pricing in. That's what the market has priced in. All right? That's what it's pricing in right now, probably even. Who knows? We knew we were looking for a pullback. We got the pullback. I'm not saying that we're into support. You should look to be a buyer at $4,000 or $4,013. No, right now, order flow for the last 3 days, you have made a small market turn. So right now, you should probably be leaning a little bit more on the short side going into the Fed meeting. But there's no way you want to be in any position once the FOMC meeting happens. And oh yeah, by the way, today is the 31st of January. So tonight at 8 p.m. Eastern, 7 p.m. Eastern Standard Time, Bitcoin will have its monthly close. This will be the monthly close on the S&P 500. So for the entire month of January, you are up. You are going to close higher than you opened. That means for January, you were bullish. Will you be bullish for February? I don't know, but there's definitely going to be prices that we can watch to help gauge our bias, to help us with intraday opportunities. All right. Currently, you're up on the day. However, you're coming back from a pullback day yesterday. You know that technically there is a supply zone setting up there. So if price doesn't show you today a willingness to trade away from, we have a brand new daily swing high already. The market has been open. I know the market opened. I know I'm ranting a little bit, but is there an opportunity to take here? Potentially. You do currently have a swing high on the market. Are you patient enough to wait to see how this plays out? Because as of right now, you have taken out this supply zone massively on an hourly close. You also took out that resistance massively on an hourly close. You have not taken out that resistance on an hourly close. So moving forward for the rest of the day, this would be the price that I would watch for hourly closes, right? But I'm currently in a short position on the euro, and I took profits yesterday. So either A, this is going to remain bullish, and price is going to continue to go up and take me out of that trade, or B, you're going to make maybe another fresh daily high over here 30 minutes after the market opened because of impatient trading, and then roll over. I don't know what it's going to do. But if you can find a higher time frame level, i.e. a daily close or open around this level, then you can take a potential trade, right? Because that's where we operate. These are our operating ranges. Is there a daily close around that hourly? There is a daily close around that hourly, and it happens to be right there. So let's go back to the intraday charts and see what we need to see. All right, so first things first, we need the market to show us the fact or the ability to trade back down under yesterday's close, which is at 40.26. We need to see that, and then we need to see the market trade back into that price to show us rejection. If you stay trading above this price, you are not looking for shorts. There is no trade to take. You cannot buy the top. You can't. Because at any point today, this could roll over because yesterday closed bearish. Okay? So near-term order flow still, even though you're up on the day just barely, I might add, is bullish. This is what you're waiting on. You're waiting on yesterday's close to show you that it is what price is respecting. You can do it on lower time frame charts, but you do not take positions until you're getting proof on at least an hourly close basis that yes, price is indeed wanting to treat $4,026.20, that exact price that it's going to be resistance today, because it's support. It's yesterday and it is support. It is not resistance. It is a bearish close. That is support for right now. Nothing has told us that this is resistance yet. So there's no trade, guys. Nothing. Your next objective daily price to watch to the downside would be here at 40.18, because that is resistance, or up here at, what's that price? Why? I don't even know. I use in boxes. They don't identify the price levels. 40.54, which is supply. So until you're trading back up there or back down here, you can't make a decision. There is no decision to make. The only thing that you know is that there is a potential for the market to trade to the downside, because it did yesterday, and you are struggling at the market open to remain bullish today. That's what we know. That's the only info that we have going into today. There is an edge in what I do. You can also get that edge. You just have to listen to what I'm trying to teach to you, right? You have to watch the videos. You have to pay attention. You have to back test the data. There's a lot of work involved in becoming a profitable trader. You're not going to find some magic strategy out there that will pull it all together for you. It takes time. You will build that magic strategy. I'm just trying to show you what works for me. Then you can take that information and turn it into something that works for you. Maybe. I can't even guarantee that you can do that. Nobody can. That's why I could never justify that of selling courses. Because if I can't guarantee you that, then what's the point? If there was a way that I could guarantee you to be a profitable trader, I would sell courses. They would start at about $50,000 a piece, and I would guarantee you your money back if I couldn't turn you into a profitable trader given a year. But since I can't do that, and no one on earth can, I don't see how anybody can justify the selling of any trading courses. All right, so let's move on. Let's go look at Bitcoin and Bitcoin short. Yesterday, now you right here you see this level 23,281. Give me a second here. There's let me see that this is even it. Let's pull this up right here. All right, this is yesterday in the Discord at 8:30. You don't need to worry about any of this because this is all garbage. Talking about gaps, garbage. This, oh, damn it. And I just made it to where you can't look at it. People will be trying to buy there, but I don't think it holds up. Or if you like the short, maybe a spike at the open gets up in the 23 to 81 area. Oddly specific. I mean, oddly specific, not 23-ish area or 24-ish area. No, 23 to 81 area. You can look for new short positions there, which is old 4-hour resistance. There is old 4-hour resistance. But there is something much more significant there than 4-hour resistance. Here's the monthly chart. There's monthly resistance right there. 23,307. So then the 4-hour resistance becomes significant simply because it made resistance under the monthly resistance. Correct. Yes. All right. So now we're getting somewhere. There's your monthly resistance. So that's the last resistance that you had until you could close all the way over here. Right there was the first time you were able to close a 4-hour candle. And that's days later, my main peoples. Right there. I can't even remember the word I was going to call you. I'm not going to justify you to chat because I think every other YouTuber in the world does that. I had a specific thing I was going to call you. Oh yeah, Fute Ledges. If you are in the Trade Talk chat room right now or watching this video right now, you are not going to be referred to as chat. You will be referred to as what you will be, and that is future legends. If you pay attention to what I'm teaching you, you will be a future legend in this game of trading. So you will be henceforth called Fute Ledges, not chat. So my Fute Ledges, that's the first time you're able to close a 4-hour candle above that resistance right there. The reason it's resistance for the new Fute Ledges that are here is simple. It's the highest closing one you have, right? I simplify things for you here. It's the highest one. It's higher than this one. It's higher than that one. It's higher than that one and that one. Now this one's higher, but we're not breakout traders here. So when we see breakouts, we're already positioned long anyways for this. So this is good for us, but we're not trying to short this yet either, right? We haven't seen any justification for throwing on any short positions at all yet. And the reason for that is simple. Because every time anybody has tried to short the market up until yesterday, they got slaughtered, right? But anyways, you get up here, then you get a couple more 4-hour closes, 2 of them to be exact, in the bullish fashion up above. What did you do? You took out a major liquidity pool right there. So what does that tell me instantly? This is the target. And I even told people in the chat, in the Discord chat, my few ledges over there, because it's a premium service. I told them, you can try to short this if you want, but please don't. Please don't. Because A, it's going to be difficult to do it if you ain't patient enough. And B, I don't know if it's going to stop there. Literally, you're betting that the market's going to reverse after making a fresh monthly high late in the month, right? Late in the month. So you could try to take the short there, but just know what you're risking at least, please. All right, just at least please know what you're risking. Know how much money it's going to cost you if you're wrong, basically. All right, because that's all we're doing here. That's our edge. But this candle became very, 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 very important to us. Simply because now you've done something. You wiped out all of this stuff right here. So you made all of it meaningless. So this is a trap. These three candles, 1, 2, 3, because you closed under the low of the breakout. So yesterday, is that still up? No, it's not. Right there. If it gets up in the 23281 area, you can look for short entries. That is here. And then if you go even smaller, look at the games that was played there. Nice close above. And a close above resistance. So if you took the trade based on merit, you had to at least get your stop above that swing high. Right? If you did, and you entered at 23,281 spot 49, you made money yesterday. But you took profits down here at support, like I told you to, because that is the trading range. This is the operating range. This is the high probable area that price could potentially return back to. I teach you how I analyze price for the most consistent and highest probable entries than anybody else in the world. The market did return back to that price. So you take profits there, then you maybe stop to break even. And then if you do get a breakdown after you entered a short position, then that's icing on that perspective cake, if you will. That's just icing. It's unrealized P&L that you can hold for whenever or for whatever, because we never know what is going to happen. It's impossible for us to know what's going to happen. I would have suggested that you do not revisit 23,281.49. That was my perspective coming into today. I look for the high or low of week to be set Monday through, usually Monday or Tuesday. Today is Tuesday. So given what data that we had coming into today, I probably would have been looking for longs, but tomorrow or the next day we have FOMC, and then on Friday we have NFP. Two major, huge, big, strong data points that could make this market's weekly range expansion that we currently have completely different. So no matter if you bought the low of the week or sold the high of the week, that trade is likely to be faded or get stopped out or whatever during those very, very crucial data points. Everybody's looking for a jobs number. They will be focused on payroll, right? Average hourly earnings. That number, obviously, unemployment numbers and stuff like that. Basically, what has the market discombobulated right now is inflation is doing what inflation should be doing after what the Fed has done. So, yay. The market says, yay, we like it. It looks like what the Fed is doing is fixing the broken market. The broken market being and only being in this context, inflation. But other macro analysts, the guys that focus on data points that I don't care about, and it's not because I don't think they work, it's just you need an economical college degree to even siphon or understand the data. You know what I'm saying? Like, that's beyond my scope of knowledge. It's beyond what I have, what I'm capable of analyzing. What I am capable of analyzing is price and price alone. And with solid risk management, you can make price and price alone a very profitable venture as long as you are minding your downside risk. For instance, I told everybody that how much money do you think I'm going to lose if Bitcoin falls, right? It'll be a very small portion because when I first got into Bitcoin many years ago, I bought a little bit with my hard-earned money, right? You did the same thing probably. You bought some Bitcoin with your hard-earned cash, USD, if you're in America, or your euros or your pounds or whatever. You get the point. That's it. I trade on the inverse swap contract. I trade on the inverse swap contract because when I'm right on my positions, I get paid in Bitcoin. I then take what profits I make in Bitcoin and I transfer those profits to cold storage. So in a sense, on one wallet specifically, every single cent of Bitcoin on that wallet is trading profits alone. None of it is my money. So yes, it's a large sum of money, and it would definitely hurt if I were to lose it. But on my day-to-day financials, the total income that would be classified as mine, that is not unrealized P&L, I will lose $0 on that wallet. Zero. As far as my money's concerned. Now, as far as unrealized gains that I have built over the years trading on the inverse swap contract, I will lose 100% of that. But none of that is my money. That's what I want you guys to do. Bitcoin market is extremely volatile. The smartest investors in the world are not shorting Bitcoin with real live funds, ladies and gentlemen. They can't. It's too volatile. There is unlimited risk. This asset can move from 1% to 12% in a day. And when we had the FTX collapse, Bitcoin literally moved 8% in one direction, then turned right around, moved 9% back in the opposite direction, and then dropped 12% back in the original direction. How can you trade that or even manage risk when that kind of stuff goes on day to day inside this marketplace? No, I'm teaching you how to trade so that way you can do what I'm doing. You can trade on the inverse swap contract, make a whole lot of money in Bitcoin, and take that Bitcoin profit, transfer it to cold storage, and just hold on to it, see what happens. If it goes to the moon, yay. If it doesn't, well, worst case scenario is you lose a bunch of unrealized P&L that you made over the years, not your hard-earned money. That's solid risk management. You can't get no more solid. It's not a Ponzi scheme. It's an actual strategy that I am deploying currently. I make my money from Forex and stocks. I do not buy Bitcoin. Do not buy it. I trade it with Bitcoin. It's an amazing product, an inverse swap contract. You should check it out. There's a link in the description for non-US users. It's called Bitget. They have the cheapest fees than anybody else in the game. And if you're not in America, unfortunately, with the FTX debacle, it has basically screwed US citizens out of the opportunity to trade on their exchange. But there is a link in the description, and if you would, if you want to check it out, check it out. If you don't. But if you do want to check it out, and you do want to put a little bit of money over there to trade the inverse swap contract, to do what I'm doing, to get as much Bitcoin as you can, risk free, essentially, once you are a profitable trader, obviously, then use code XTSC. That is X-Ray Tango Sierra Charlie. All right, for right now, Bitcoin looks to be pushing up. So it looks like it's not done with this retracement. So we have to go find our current liquidity pools. Those are going to be difficult because we are nowhere near any of them. Right? There is liquidity. Here is liquidity. Now, there is intraday liquidity that the market could look for. But like I said, when you're not around any daily levels, then you're really starting to get outside of your trading edge. You're like, the further you are in the middle of a daily range without any daily levels, you're not even trading with an edge at that point. You're not trading with my edge, not the edge that I'm teaching you, right? You're trading with your own edge or somebody else's. This is what we have currently staring us in the face. Looks like a big breakdown candle. Looks like this candle should maybe hold as supply. Will it? We don't know. Time will tell. So there is no opportunity to take Bitcoin today. It's still working off of yesterday's downside break. You did take out support yesterday to the downside, 2 of them. One there, boom, boom. Here, boom. But this is, inside of a smaller range. So we got to go out bigger. We got to get bigger and see what we got here. All right, now this gets a little bit better, a little bit easier for us to decipher what's going on. So we are currently trading as an inside week. We did not take out last week's high. We did not take out last week's low. So the marketplace is probably going to be looking to do that soon. So there probably isn't an edge even to take a Bitcoin trade until we get closer to either one of those two levels. Then we can find a daily level, then look for hourly supports built in and around or that level, and then look to target one of these levels for that liquidity run. Or if we think it's going to reverse the market, we can do it during the news on FOMC and look for the liquidity break trade where the market takes the liquidity, then we jump in with the marketplace and ride the momentum back down to the opposite liquidity, right? But that can't happen today either, because today's not a news day. There's no high, there's nothing out there really that can shift the marketplace as far as any data that I think is, I mean, we can look, but I don't think there's much of anything on the docket for today. We got the house price index, it was a 1 star, 1 star. There's some CAD news that's 3-star GDP. That already happened at 8:30. That's probably why we got a little bit of a spike on the dollar, just simply because Canadian loonies has a small portion of their assets in the dollar, in the DXY basket of currencies. All right. So just the fact that this thing made a move, if it did make a move, that could have been why you got a little spike in the dollar. Down here at 10 o'clock, we got consumer. That's already happened. What was it? Was it good or bad? It looks like it's a miss. 107. Consumer confidence in January. So that's typically not bullish. What does this economic calendar say about it? A higher than expected reading should be taken as positive / bullish for the USD, while a lower than expected reading should be taken as negative or bearish for USD. Oh, okay. Well, it's lower. It's 107. 109 was forecasted. 109 was previous. So that number's lower. Therefore, we should take that as a bearish move on the dollar. And just by looking at Bitcoin, you can see that bearish move in the dollar right there. But will that hold up is the question. Will that hold up? There's your bearish move on the dollar right there. Boom. The dollar has been acting like it wants to trade away from monthly support. So I would probably say that information will likely be faded with FOMC, because you know he's going to come out and you know he's going to remain hawkish. He's not going to change anything. There is nothing to change yet. We know we got a lower CPI. We know the market's pricing in a 25 basis point rate hike. We know he's going to more than likely do that, but we also know he's going to say that we are highly data dependent and driven right now, so we can't make any rash decisions. The news people are going to ask him if they're any closer to pivoting or stopping and hiking interest rates, or are they going to start slashing interest rates? He's going to not answer their question. He's going to dance around the question. Like, we know what's going to happen. Pretty much, right? The same thing that always happens. They have already set forth their goals for a majority of 2023. It's rate hikes and, probably 25 basis point rate hikes until they see the jobs number start to do something, because right now it's not doing what they think it should be doing. And other market participants are the same. Let me play you a little video real quick, just so that way you get an idea of what these smart people, like much smarter people than me, are saying. Right here. Just listen to
There
that.
are opportunities for this rally to go longer and higher than you would expect.
It's not a strong growth picture. It's a grind, but I think it stays positive.
We're not as comfortable as I think the market is that the Fed is done here, that they will get inflation under control, that we will have a recession.
If we are going to see a recession sometime this year, I don't think that's priced into the S&P at all.
If the data continues to moderate and inflation continues to fall, that's your hike and pause in March scenario.
This is Bloomberg.
There you go, folks. There is consensus for you. Look at that. Trade Talk answered all of your questions in 4 seconds by using a, 3-second intro for Bloomberg Financial. That was 4 different analysts, all prospective CEOs of their funds. One guy there is even with Bank of America. So, yeah, I'm sure he lives in a big-ass house, probably has a big-ass boat. They don't have no clue. And they all 4 are different biased right now. 2 of the first ones, they think that this is good news. We're going to see this rally continue. It's sustained. We're golden. Just buy the dip. Back to BFD, baby. All of 2023. BFD 2023. Woohoo! And then you got the other 2 that are boo, the old nasty bears. Yeah, get them out of there. Boo. They're bearish. No, I am not drunk. I'm just basically trying to show you what macro analytics do for people. It makes them just as confused as technical traders. Oh, man, it's good. It's good. It's good. A little bit of comedy there, folks, is all. Just a little bit of comedy. Now, I am going to do a deep dive video. I'm going to put it together. I'm going to make it all professional and everything, have it edited and all pretty, and show you just how confusing times are right now. Mainly what the Fed is looking at, guys, is this right here. And until it does something, they don't know what to do. So they're going to continue to do what they're doing, okay? They're going to stay on the same path. They are not going to pause rate hikes. If you are expecting that and you are taking positions based off of that fact that you think the Fed is going to pause rate hikes because they have to, because inflation is falling, then you need to hedge that position. Secondly, if you are bearish, if you think that this is a bull market rally, this number is about to spiral out of control to the upside, and the Fed is forcing us into a recession, and that has not been and is not priced into the S&P 500, and you are looking to enter the market bearishly right now, you need to hedge that position. Okay? That's where we are currently. Q1, end of month, January 2023. Brought to you in part by Trade Talk. We don't know. None of us do. If we knew, we would tell you guys. I'm telling you, if I knew what the market was going to do, I would do a live stream every single day. I would tell you to buy here, sell here, put your stop loss there. Once you make your money, you can go in 125x. You can sell your house or mortgage your house to the fullest extent possible. Sell your kids, sell your boat, sell everything. Go in to the exchange, full blown, everything you got right here. 125x at this price. And then make sure you get out right here at this price. And then repeat it process tomorrow and again until you have enough to buy Tahiti or what other island you would like to go buy. Maybe the Virgin Island is for sale. I don't know. You see what I'm saying? No, we got to take a smarter approach to this. This stuff ain't easy, man. What you're trying to do here is you're trying to take money out of those fat cats' pockets. Literally. The richest, smartest people in the world, you are trying to beat them. Okay? Keep that in mind when doing this. That's why you have to take a much different approach to just following some random knucklehead on Twitter or YouTube. please be smart with your money. I don't want you to lose money based on something I say. But if you want trades, I'll give you trades. I'll give you trades all day long. Will they be right? No, not always. But I'll give them to you. USDJPY traded down to daily support. You currently do have a breakout of a trend line here. Now, will this be a sustained rally, or is this just a broader pullback from this longer term trend that we have here? I don't know. But technically, as of right now, you're trading in a range. So we do have potential opportunities looking at us. There was quite a bit of bearish momentum coming into that technical daily support. So be very careful about just buying that. What I would say for the majority of the rest of the day, if you are interested in taking a USDJPY long because what you currently see tells you to do so, well then this is the price to watch for today's close. Or if you want to take that position a little early and try to get, front run the market similar to the way that I did on Euro USD, then I would watch that price right there and any closes under it. Any close under 129.841, then that means you're not looking to take long positions just yet. But based off a trend line analysis, you do have an intraday break. All right. And that trend line is drawn from Friday, October 21st, high, and attached to Friday, January 6th, 2023's high. So yesterday you did close above it. Is this trend line going to be significant or offer any type of support in the future? It's impossible to know. All right. Trend lines can be broken just simply by price going sideways. Now, if we look at this trend line on linear scale, it looks similar. So yeah, retail is going to be buying a trend line break right here. Simple. Retail will be trying to buy a trend line break. So what I would probably want to do if we're even thinking about taking a long trade on that is I would definitely want to see this level hold on a daily closing basis. And I could justify a target for you of 130.617. That is as long as you do not close below 129.762. As long as 129.762 remains in effect unbroken. Now you can wick under it and take out yesterday's low as long as you close back above this price. As of right now, this is your support. And as of right now, that is your untamed or untapped liquidity. So if the market is looking for higher prices, I think we can watch this little area. I am not taking positions on this because I am still short this from the top. So I'm not going to be taking that position. But if you want to, there is a potential trade that is starting to build. It may not be today, though. It may be tomorrow. So today's closure is going to be very, very important. But remember, you do got FOMC coming up, which will make big spikes both up and down. And they will be random market violent spikes. They will not be, you will not be able to predict which way it's going to go, where it's going to go first. All we will have is information that we have at that time. We will be live for it, naturally, as we always do go live for the big news events because we trade them, right? We trade them. We know how to manage our risks. And so far this week, we're doing great. Bitcoin short, plus. That was a winner. Awesome. Euro USD short, plus. That was a winner. Awesome. So, yeah, I can take a trade. I'm up on the week. I got risk I can afford to lose. So, yeah, we'll look to trade it. We will look to trade it. Sorry, I didn't understand correctly on Sunday stream. You said Jordan invested. Now, hang on, Paolo. Don't do stuff like that in the public streams. That was at the beginning, right? No, he was saying on public streams that he had 50% of his net worth invested, right? That's all I said. 50% of his net worth. That means his money. There's no way I would do that now. Those times were different because he understood the fact that the Fed was essentially in control of the bull market, right? So he was trading with the Fed. And plus, when you say stuff like that in a public stream, you're going to stir up drama that's not needed, right? Yeah, you can ask me that question privately or whatever, or go back and listen to the video again if you have access to it, which you clearly do, and listen to exactly what I said, all of it, with the context around it, right? With the context. I was trying to tell you why he was so invested. And would I have done that, even knowing the same data and information? No way. This market is too volatile. And now you're even saying that I brought up it was just 40 grand. Yeah, he showed the actual P&L. Once the bull market started, that 40K originally turned into like 270K because Bitcoin's price went from 9 grand to $55,000. Right? So yeah, up and at $55,000, 40 grand bought at 3K looks a little different. But I have no trouble with Jordan. I was making a point about me, not him. Right? But you're taking something that I said out of context. Clearly, you missed the point. The point wasn't even about that. The point was we are in a completely different climate than we were during the last bull market phase. And we're not even near the halving yet. The halving isn't even going to be until 2024. And if we're in a recession while the halving's happening, we still ain't going to have 50% of our net worth in Bitcoin. I promise you that. I'm not going to. You can put as much into it as you want of your money in it. But just go back, re-listen, because I was clear as a bell. You're the only person that's even asked anything remotely close to anything about that portion. I find it very extremely odd that he would even do that here, right? But yeah, I was making a point about how much better things were for Bitcoin longs back then versus Bitcoin longs now. And how he approaches the market versus the way I approach the market, right? That was the context. Whatever the amount. See what you've done there? He is sitting pretty at the moment. Of course he is. So am I. Dude, when CTM got started as a At first it was public, right? When Jordan opened up his YouTube stream, it was public. Anybody could be in the chat. It wasn't until it started to grow that he took and had to hide it behind a paywall. And he did that specifically to keep the bots and the shillers out. Right? But back then, things were pretty clear. Very clear, in fact. Especially once the pandemic took place and the Fed took the reins of the economy. Once that happened, everything changed. Everything got bullish. It wasn't just Bitcoin. Did you see what Tesla did in the same amount of time? So the shares that I owned of Tesla pretty much did the same thing that Bitcoin did. Oh, also, if you bought oil around $1 or $2, if you were lucky enough to get filled on that position, look where you are now, right? You're taking things way out of context. You're creating just whatever, dude. Whatever. Take it however you want to take it, bro. Jordan knows I ain't got nothing bad to say about him, and anything I ever say privately or publicly, I say it to him, right to him. He can listen to the whole stream if he wants. I'll make it public to him where he has access to it. You know what I mean? He has access to all of that. But you should have asked that question on that video, not here in the public chat. Please, don't try to start drama. Don't forget, lightly leveraged. Correct. Lightly. Very lightly. You have to be lightly. He did say that in public. Yeah. No, the issue is the stream in question wasn't a public stream. What I said, that is what we're bringing up here. That stream was not a public stream. That stream is a private stream for people like you, members of the community, paid members. If I wanted to make those streams public, they would all be public. But you could ask the question on that video, or if you're in the Discord at any time, DM me or DM me on Patreon. I mean, there's several different ways you could have done that instead of now, you know what I'm saying? Now, just because people are going to think that there's something, now they're going to want to know, oh, what's going on between you and Jordan, blah, blah, blah. There's nothing going on between us. There never is. I was making a point about two certain different things completely. Like right now, Bitcoin is very much different than it was back then. And I still would not, even knowing all of the stuff that he knew and that I knew then, would not have been able to put 50% of my net worth into it. That was the point. Even knowing all of that, that was my entire point. Would you rather lose your hard-earned money is my point. Or would you rather lose unrealized P&L? Because if you do what I do, you'll just lose unrealized P&L. If you go outright, use your money and buy Bitcoin, then if Bitcoin, something bad happens to it, then you're using your hard-earned money and you're losing it. That's the whole point. That's the whole point. I don't have the same feeling and beliefs or anything as anybody else in this. Like I said, I don't trust most exchanges. in crypto world right now. If FTX can go down, so can all of them. And that's going to make it pretty damn difficult to trade any of their products if you can't even trust leaving money on their exchange. So it makes it more difficult for U.S. citizens to even be able to find an exchange to trade on. But that's exactly what the U.S. wants anyways. Trust me. The U.S. does not want you doing what I'm doing. Yeah. No, that means I was looking for longs. And I would buy hand over fist at 13K. Anything undervalued, you can buy. I've said 100 times. But with an amount of money you can afford to lose. That has always been the stipulation. Always. This stream took a completely, totally different turn. So I'm going to turn it back around. Listen, guys, if you want to buy Bitcoin, buy Bitcoin. But make sure you're using an amount of money you don't care to lose. And what exchange you want to use it. And put as much money on there as you want to do. It's your money. I won't lose 1 cent of my money, no matter what I say, right? It's your money. Be smart about it. You need to be smart about what you're doing here, and especially now. We don't know what's going to happen in the future. FTX is going to change a lot of things. Before December, that link for Bitget was good for the US and everywhere. Anybody. Since FTX, US citizens can't even, Bitget won't even accept you as a client because of regulations that are being put forth based on what happened with FTX. So we haven't even seen all the ramifications that that's going to have for Bitcoin moving forward. So basically, I mean, we can't even start talking about Bitcoin until we know what's going to happen with what we're even allowed to do, what we're not allowed to do for U.S. citizens. There ain't even no reason for you to even think about trading or buying or investing in or holding any cryptocurrency for that matter until this FTX thing blows completely over. But we know that's not going to happen, right? We know that's not going to happen. Bitcoin moves too much. There's too much opportunity there. If you can get an asset that moves that much in a day, almost every single day, and you can generate consistent returns, you can make multi-percents per week easily. As long as you know what you're doing, as long as you got good, strong risk management. Yeah. Yeah, buy the dip. Just do that. Buy the dip. But also watch Saturday's or Sunday's upload, because I had a very specific place that I wanted you to start even looking before you even start to become a buyer, right? If you remember that too. I'm talking about in this current move here right now. You're bouncing off the weekly open would be my assumption as to what is currently happening today. Right? If I had to make a guess, I would probably say that price action has found support at the weekly open, and the buy the dippers are out in full force ahead of the FOMC. which is not a good time to be a buy the dippers. And this right here could just simply be looking to run up above yesterday's liquidity, which is where we have our entries and stops currently for that short position here. This is your last spike up. The market looks like it's headed straight for that. So maybe it goes up, tags the midpoint of this downside candle here, and rolls right back over. I wanted you to buy the dip lower, much lower. I believe on the video I said look around 21,808 as that's this resistance, and that's just to see if it holds. So I wouldn't even be inclined to be a buyer until that, right? You need a sufficient pullback for a sufficient rally. It doesn't always happen, but you can see when the FTX, this wasn't the FTX runoff here. This is when Luna fell, when Luna collapsed. But you still got a multi-week rally pullback. So if the markets are done being bearish, you could pull all the way back to there and still sustain your bullish rally because you would still be green on the quarter and on the year. You wouldn't be green on the month because today's monthly close is going to be wherever today's close is. That's going to be your monthly close. And then we'll have new data. And we'll make new decisions based off that. Because we analyze markets daily. All right? On a daily basis. But I want you to take the trades. I want you to correlate them. Take them at correlated areas with your higher time frame areas. Please. There is an area here, right there, and there is an area here. Those two areas could be fantastic places to watch to see if the buyers step back up. But you're buying at resistance up here. You're buying at clear, defined monthly resistance. And just like you can't short into support, you can't buy into resistance either. Bitcoin could just simply be making a run back up to 23,307. Check that. Make sure sellers are there. Make sure the supply is there. If the supply is there, it could simply roll right back over from there. I want a deeper correction. Then we can start to look to be a buyer. I want it to look similar to, something that looks like a buy the dip type of something or another is going on. So if we put the mean reversion channel indicator on this asset, fair enough. You did come close to the low end of the mean reversion. But I mean, look how big you were out of it. And look for how long you were out of it. Right? Then you had 2 extended periods of consolidation. Then you made another run up. More consolidation. Liquidity purge. And then you drop back down. So this is an hourly time frame. Very small. Very, very small. The highest that I look on this is a daily. Yeah, you can see that clearly still on the daily. You are still blown out. Now it can continue because we've seen it blow out to the downside here, all the way deep into your expected volatility range, and then blow out again down, right? I mean, yeah, you can keep blowing out the upside of this thing and keep going, but there's just nothing there's nothing fundamentally out there right now that would suggest that's even a plausibility. You got to be smart about these things. Smarter. Think like a high dollar investor or a high dollar trader. Even if you don't have a lot of money, still think like one or try to. Why would I want to buy it at 23,000 unless I had expectations of it going to 28 grand or something like that? I wouldn't. I would much rather be a buyer back under 20 G's as I was a buyer at 16,530. So closer to this level would be better, but not under it. Not until it sets something else that looks or appears to be a low, like a Q2 or Q3 low. Yeah, we got a lot of stuff going on right now. Got a lot of stuff going on. FOMC and all that stuff, that's going to change a lot. That's going to change a lot of the way this looks. If Bitcoin continues to blow out to the top, your highest high, that your next monthly swing high is August. Right there. Because you've taken out all the way to September. So current monthly liquidity August high or January's low. Given where price is at this specific time, I would say you have a better chance of targeting 25 grand. But like I said, we need more data. We need a pullback. We need to check support, find support. We need demand to step up. We need to see that it clearly is support. We can get long there, manage our risk, manage our expectations. And then if it ends up being support, then we will have bought a pretty damn good spot and we can set on those positions as well. Right now, my bias is bullish. My macro bias is bullish. But right now, I am not a buyer. I want to buy this thing when it is pulling back into support and not supports that were made last week. Not those supports, because we've already broken them. It is possible that this support, it did check it. Maybe it does hold. I don't know. Maybe 22.6 is where demand steps up. The Fed would literally have to say some earth-shattering stuff for that to happen. Literally. Something to the tune of, we're going to pause hiking rates for now. And in fact, we think we were wrong, so we're going to go ahead and cut half of a basis point. 50. We're going to go back 50 basis points from where we currently are. And we're going to set on that for 6 months to see if this inflation actually comes down. If he says something like to that effect, yeah, 26, 27K is a possibility. But we know he's not going to say that. So I'm thinking we could see lower prices. But I do like the fact that we're trading lower at the beginning of the week. I always do. That is more of a bullish signal for me than it is a bearish one during normal trading times, not during NFP and FOMC weeks. That's when, remember, trading is about probabilities. And we know that 60 to 60, I can't remember the exact number, like 67% of the time, the weekly high or weekly low is made. early on into the week. We never know which is which. We never know if it's the high or the low, but we know one or the other is likely already made pretty early on into the week. But that's also in, normal, not high volatility times. This is extremely high volatility. In fact, if we go over here and pull up Bitcoin on the volatility metric, let's just give it a look since we haven't lately. Because, most of my audience watches Crown. I can see all the analytics, right? Like, most of my audience is in America. Most of my audience watches Jordan. Most of my audience watches the same people. Eric Crown's Crypto Cave, all those people. Most of my audience watches those people. So I have to do something different than they do. Otherwise, if I'm just providing you the same value that they are, then what's the point? What's the point of being subscribed to any of us? But yeah, you got a massive rise in volatility. You don't need this indicator for that. You can see it in price. There's both of your volatility indicators showing you just how volatile Bitcoin, the explosion in volatility you got, which is a very bullish signal. Don't make no mistake about it. That's very bullish. This is why we're structured now more bullish than bearish. But at the same time, we need both these indicators to cool off. We would much rather. So look when I bought at 16,530. Look where volatility was when I was a buyer. Volatility was on the lows. It wasn't on the lows on this indicator, but on Crown's indicator here, it was on the lows when I was a buyer. And I told you when I was going to be a buyer. I gave you the exact day. The exact day. Which you've already seen, and I know you have because I say this stuff all the time, and you're a member, so you know what I'm about to say. I can't find it. It doesn't matter. It's irrelevant. Let's look at Jets. Because Jets was forming a head and shoulders. Inverse head and shoulders. I don't trade that stuff, but it looks like it broke out. Look at that. Broke out and been trading sideways. So it does look like a pullback is coming, guys. And we're probably seeing that pullback right now. It's going to be easy for us because we know what levels to switch our bias. And we can watch the S&P 500 for that. Our bias changes the moment we get under 38.45. We are no longer bullish. Under 38.45, we are no longer bullish on risk in general. And you can go across all the assets. Like right now, back to oil. You got two major levels here, but you're bearish on the year on oil. Our year, the current year that we're in. But you'll probably get some liquidations, downside and upside, before you truly find demand, if there's demand. The China reopening is supposed to bring back demand. We'll see if it does. I said early on, when I say early on, I mean before 2023 happened. So it was actually late in 2022 that I thought 2023 oil could be a phenomenal bullish hold, right? Based on the fact that we were trading right there at the yearly open 2022. So if oil is going to be bullish, based on the China reopening, then oil would be a hell of a trade to the upside. If you can't trade U.S. oil because you're in the U.S., you can trade either CL1 on futures or you can buy USO. USO is the United States Oil Fund. It tracks the spot price of oil. Not one for one, obviously. It's not the same price, but if you look at this price chart pulled back like that, and then look at oil, you can see it tracks fairly similar. We provide value here. US, right here, US 100. We're just looking for those yearly opening ranges because that's where we know we're going to be bullish from, as long as we're above them. Because objectively, you are bullish. I thought I already did all that, but in the monthly res here, but 11,022.80, that's going to be your yearly opening price for this asset. And there are two fantastic places to watch for potential buying opportunities if we get an extended pullback based off of, what Mr. Powell has to say. If he comes out really, really hawkish because he wants asset prices lower, asset prices are going to go lower. They have been priced to do so. That's why when you hear them say Cinderella rally or whatever, that's what they're talking about, right? It's fake. It's bull. It's not real. Fairy tale rally, whatever words they make up for it. It just simply means that. They're not buying it. Investors, they don't think it's real. They think it's false. You could have just liquidated that high right there, and you may never see $1,200 again for the entire year of 2023. If you have stickier inflation, and stickier inflation doesn't mean higher inflation. All right? Stickier inflation is the term that they are using for you newer investors out there. What that means is if you get stuck on inflation higher than the Fed's projected target. So the Fed has a projected target of inflation at 2%. If you get stuck, say, at 5 or 6% inflation month over month over month over month over month, you know what I'm saying? And it's like it's not moving any longer. That is the biggest risk for 2023. That's the biggest risk for 2023. That's my promise to you. That as long as it continues to keep doing what it has been doing and trending lower, a lot of people think that is an impossibility unless they get that, unless they keep hiking rates, hiking and hiking and hiking, which, remember, hiking is going to drive us directly into a recession. But in order to meet the Fed's expectation of this 2% goal, that's what they would need to do. And they don't think the Fed will do that. They think the Fed's going to pivot or pause. That's not a pivot, but it is a pause. That would be very bullish for asset classes in the near term. But the biggest risk that we have staring us in the face right now is stickier inflation, or stuck inflation, where it just stops going down. It doesn't even have to rise. If it just stops going down, then you've got stuck. It's no longer stickier. It's stuck. You got stuck inflation, and the Fed is still pivoting. That's going to pull the markets very bearish very quickly. And some analysts don't think that's priced into the markets yet. I'm not one of them, but some analysts think that's not even priced into the markets. I was listening to one guy today, basically his argument on the whole everything made more sense to me than anybody else's argument, that he thinks the Fed has done enough and that they should pause because inflation was kind of stuck here. If you remember, we wasn't getting the numbers we wanted to see. We wanted to see increments of inflation drop at least 3 to 0.4% each month. Every CPI, I want to see at least 4.4% drop. 5, 6, that's good news. Then hold up, see what happens. Just pause your hikes. That way you don't have to necessarily drive the economy into an inflation or into a recession to see if inflation continues its descent on its own. Maybe you have done enough. And he had data to back it up as to why. And the data was directly correlated with jobs, because that's what the Fed is worried about. The Fed has expected this already to go up, and it hasn't. And that's what's got them and everybody else in the whole wide world up in an uproar, talking about this, talking about that. Well, what about that? What about this? That is why. Why is this not going up yet? We know it's going to, because of rate hikes eventually. So all the macro guys are saying this might not even occur till 2024. So if that's the case, 2024, do you even buy bonds? Do you even buy risk? Stocks. When I say risk, I'm talking about stocks. S&P 500, NASDAQ, Dow Jones, all of them. We know that even though we haven't had the greatest of earnings yet, tech is leading this rally, right? For all 2023, tech is leading the rally. If you don't believe me, just go look at the charts. There's Apple on the month. We've only had one this year. On Apple, you've almost taken back all the losses that you sustained in December. You had almost got back to 148. AMD, all of them. On this channel, we were advocating for that. I wanted you to buy tech at the lows. Amazon, year to date, boom, you're up from $85 to $103. Ford, up from $11 to $13.35. Facebook from $122 to $148, up on the year. Google Up on the year, 89.83, up 98.87. Tech is leading the rally. We know that. Netflix was the best buy for me. And it was the best buy for all of you. Netflix is going to make money, guys, regardless of what kind of environment we're in. Just look at their earnings. Their earnings are heavily skewed to, yeah, we know how to make money. More so than it is to, no, we don't know how to make money. Nvidia, up on the year. And also your safe haven plays. Remember when I said I wanted to see on O'Reilly before I can be a buyer, but eventually I would be a buyer of O'Reilly stock? A pullback. Remember how I told you guys not to be a buyer at the top of O'Reilly? Wait for that pullback, because when tech rallies, O'Reilly will pull back. Remember? O'Reilly pulling back. Everything is right on schedule. Palantir, Lucid, definitely don't be a buyer. Lucid Motors. What happened there? If you'd have just bought on the 3rd day of January and held at one point pre-market, you were up 157% on the year. Insane. Nvidia, you know they're going to make money. And you got a breakout of a clear and obvious inverted head and shoulders there. That has a measured move, by the way. Up to 240-ish. Just by looking with the naked eye. I could see Nvidia hit 240. Just from the breakout of a pattern. But I don't trade patterns because they don't work as often as they should. But right shoulder head, well, I said that wrong. Left shoulder head, right shoulder. There's your neckline, clear and obvious break. You retested it, but the neckline to the top of the head is your measured move. That puts you well above 240. 240 is just, that's a conservative estimate of what you could see continue to happen on Nvidia. I wouldn't be a buyer at 196 expecting 240 based on that info, because like I just said, I think head and shoulders patterns work about 30% of the time. That's not good enough odds to just be a random buyer based on a breakout. My space still looking terrible. Me being a buyer at $10 like an idiot. That position's down 50%. Tesla, Walmart, stuff like that. I mean, yeah, we know what's up. We know what's going on. We mostly kill it around here. We need to pull back on Bitcoin. A significant one, more significant than what we've gotten. I would say a check of the monthly open would not be possible. I wouldn't want to see that, as that would be very bearish, I think, if you give back all of your January gains next month, Q2. Even, I think, would be very bearish to give back all your gains. 19,392 is a significant pattern to look for potential buying opportunities, because that is potential demand on a quarterly basis. But go back on Bitcoin and look, does those levels offer any kind of pullbacks in the past? They didn't really. I see nowhere on this chart where a quarterly demand or supply was the driving force behind a corrective move. Most of the time, Bitcoin just goes up or down when it isn't going sideways. It's so freaking volatile. So we'll see what happens. Let's see what we get with what the FOMC says. Let's see what we get with NFP. Seems like we've been getting freaking FOMC every single week almost. Time is flying by. But yeah, I think right now you're probably gonna see a whole lot of this. When is FOMC? It's tomorrow, right? Or Thursday, sorry. I believe it's Thursday. Let's go look real quick and then we'll wrap this baby up. Wednesday, ADP, non-farm employment change. That's a pretty good one to watch. PMIs, ISM PMI. Today's Tuesday. Thursday. This thing doesn't even show FOMC. Is FOMC even this week or is it next week? I gotta figure it out. I'll look into it. I know NFP will be this Friday, though, because today's the last day of the month. That means tomorrow we'll have a new month, and non-farm payrolls always comes out the first Friday of the month. It's tomorrow. So FOMC is tomorrow. Tomorrow we'll be streaming live tomorrow at 2:00. Well, we'll start the stream at 1:30 because the numbers come out at 2:00. And then the press conference comes out at 2:30. So we'll stream the actual move off of the print because we pretty much know it's going to be a 25 basis point rate hike. We'll see what kind of reaction the market gives us based off of that information. And then look for that info to be faded, especially if it's bullish, because you pretty much know that he's going to have a hawkish stance. He has to continue to have that stance. Otherwise, he looks completely wrong. And what he doesn't want to do is give anybody the sense that they don't know what they're doing and that they are doing something wrong, just like they did back when they said inflation is transitory. They don't want that to happen again. So they're going to continue on the same path until they have more data. Right now, PCE, which is their favorite thing to look at, is where they want it. So that's good news right there. It's been bouncing basically right around there where their sweet spot is. The inverse yield curve and all that stuff is still out there. Everybody knows, you know what I mean? So, and obviously if they keep rate hiking, they're going to drive us straight into recession. But I think we're stuck with 25 basis point rate hikes at least until Q3. But we'll see. All right, you guys have a fantastic rest of your day. I'm surprised 68 of you stuck around that long, especially through all the rants. The rants are generally where you will find a lot of value here, though, because I'm not focusing on what I'm saying. I'm just randomly repeating whatever words comes to my mind, which I've been told to stop doing because that's not exactly the best content out there, but it is what it is, man. I'm not a content creator. I am a trader. But yeah, tomorrow we will be streaming that at 2 o'clock. Probably look for us to go live around 1:30. Hope to see you there. Then we'll look for trades. All right, we'll see what we got going into that meeting. If there is a clear and obvious setup, we will take it. You know we will. You guys have a fantastic rest of your day. Make sure you trade safe. Make sure you trade smart. And as always, happy trading, everybody.